Hello, everyone. It's Jonathan Weaver. I'm a housing counselor with the Mon Valley Initiative. It is Thursday, May 23rd, and this is the third of our Homebuyer Club series this year. And I think that this evening's probably going to be one of the most important ones that we've done so far this year. I know we talked with Ted George and Jake Carson with Huntington Bank earlier. They talked about the mortgage process. We also talked to Jennifer Quattrone, who touched on the PHFA K-FIT program, and that was informative. And tonight we have Ashley Gessler with Goosehead Insurance. And I think insurance touches so many different parts of our lives that it really can make a big difference in not only home ownership, but rental insurance, car insurance. And Ashley is going to be kind enough to share a little bit of her expertise this evening to help us as we're working towards completing that homeownership goal, if that's what we're after. So, Ashley, welcome. Thank you for helping us this evening.
Sure.
Tell us a little bit about your role at Goosehead and how long you've been there and your background.
Yeah, so I've been in insurance for about 15 years now. I started at a different independent agency, and then I left and went to a captive agency, which we'll talk about a little bit what that looks like, what that difference is. And then Lisa, who we worked together at the original agency that I worked for, she branched out on her own a little over 5 years ago and started her own Goosehead agency. And then I came, oh no, I guess it's been about 7 years for her because I came on board 5 years ago. So I'm a senior account executive, so I help customers with all personal lines of insurance. We can also do commercial insurance as well, but I do farm that out to somebody because that's a specialty that I'm just not terribly well versed in. So, but yeah, we're an independent agency. So again, I'm going to talk a little bit about what that means. But we have the ability to shop customers around so they don't have to spend their day calling every single insurance company they can think of to get quotes. We do that for them.
Good. So that brings up a good point, Ashley, and something that I mentioned to my clients is that, if you go to a State Farm agent, guess what kind of insurance you're going to get? You're going to
Correct.
State
You get
Farm.
State Farm. Right.
And then when you go to a broker like yourself, then
Right.
then maybe there's several different companies, maybe smaller companies, maybe that you're not as name familiar as some of the big guys,
Right.
but still good companies with good coverage.
Yeah, absolutely. We don't work with companies that aren't A-rated or better. So there are a lot of companies, like you said, that you may not have ever heard of. But actually, a lot of them are owned by some of the bigger companies. We have some companies that are owned by Liberty Mutual, some that are owned by Allstate. So you will hear some of the bigger names, but these companies stay smaller. They're able to keep their prices lower because they're not advertising during the Super Bowl. Um, like a certain somebody. So yeah, you get a lot of options and usually some really good savings that go along with it.
Wonderful. So, one of the things I mentioned to people as we're talking about, working towards homeownership, I suggest they start to try to build a team of people around them, from
Yeah.
lenders to realtors to home inspectors. What should people look for when they're trying to add a homeowner's insurance person to that team? What
Yeah.
kind of things what you think, would you suggest to them if you could pull back the curtain a little bit? Is there signs or things people should look for, or is it pretty much just the same?
Yeah, I mean, social media is a huge presence now. You'll see, people jumping on there and asking for recommendations of who should I go to for this, who should I go to for that. The bulk of those recommendations you're going to see are independent agents because we do have the ability to shop around to customer or for customers. You're always going to have the stragglers. Well, this Erie agent or this State Farm agent took really good care of me, and I'm sure they did. But your situation is very different from theirs. Even if you don't think it is different. So it really takes a professional to be able to gather all of those details, not just, box checking of what I think you should have, but really having a conversation about what's important to people. Um, that's what I think just having industry experience, between Lisa and I, we've got like 25 years of experience in insurance and the market is changing so quickly all the time. Just having somebody that is really invested in additional education, research, carrier partnerships. We do a really good job writing business for our carriers to make sure that we have long-term relationships with them. So we don't have to worry about, I hear all the time like, oh, my State Farm agent sold the agency and now I'm with this person and I don't even know this person. We're in it for the long haul. So, it's just important to really do your research, I think. And frankly, some personalities are just not going to click. So if you call an agent and you just don't feel like this is a person that I want to call in the event that I have a claim, then don't work with them. I think it's important. I do a lot of just coverage reviews for people too. So not necessarily trying to sell them anything, because sometimes I can't beat what they currently have. So I'll offer to do a coverage review for them and maybe just make some suggestions on things that they could improve on their own policy, to save some money or just get better coverage. So this is such a people business from top to bottom. And I maybe not be able to help somebody right now, but in the future, they're going to remember that. And I think it's important to build those relationships for long-term success.
Agreed, agreed. So one of the things I think, and I don't know if it's true, Ashley, but sometimes I think insurance companies, they have a board meeting and they're like, well, we need more car insurance. So the way to get more car insurance is to lower premiums.
Right.
And then 6 months later, they get back together and say, oh my gosh, we got too much car insurance. So we're going to raise the rates,
Yeah.
and let people jump off if they jump off, but we'll keep the people that are paying extra. But
Correct.
dealing with an agency like yours, at least, then I can be with you, and then we
Correct.
look at different
Yeah.
companies,
Yeah.
if
We,
that would
we,
happen.
we say that all the time. You can keep your agent and shop your rate.
Yeah.
So, if your rate goes up and you're not comfortable with it, give me a call and we can take a look at our other carrier partners and see if there's a better option out there for you. You're never locked into these policies. You can always make changes and adjustments.
So to the,
Sometimes it is still the best fit, and it's just a matter of having that discussion.
yeah, and so to the client, there's one point of contact, which is you.
Correct. Yep, it's just me, and we do have a full customer service team behind us, of course, because a one-man show is a scary thing when, if you're out of the office unexpectedly, you need to have people backing you up, and we have a great customer service team that helps us as well.
Good, fantastic. So great. You mentioned you had a little presentation. Is that
I
something we can
do.
pull up and get that
Yeah,
going?
I do. I can definitely share my screen. I'm not going to bore everybody to tears. A lot of these slides you're going to see have a bunch of words and stuff. I'm just going to touch a little bit on each of them. I'm not going to read through all of this stuff. I'm going to hit the important points and then we will keep it moving.
Good.
All right. All right. So let me know if you guys can see what I'm seeing. It should say insurance basics.
Yep, there it is.
All right, perfect. Bear with me. I'm on my daughter's MacBook, and frankly, I don't know how to work it. So, all right. So this is just my contact information, email, and my cell phone number. We do, as we say, work real estate hours because we're dealing with real estate transactions primarily. So we do take calls after hours. If you need us, we are definitely here to help. So you'll have access to this information, after the presentation, of course, if you need us. Okay. All right, so just real basic, what is insurance? Property and casualty insurance, it basically protects against any losses to your home or car, and any legal liability that may result from an injury or damage to the property of others. Basically, insurance is around to make you whole. If you have a loss to your personal possessions, the house itself, to your car, home insurance is something that's probably new for a lot of people, but car insurance isn't. You hit a deer, the insurance company cuts you a check, you get your car fixed. It's basically the same thing when it comes to home insurance. It's just usually those losses are, unfortunately a lot larger. So as we talked a little bit about, there are different ways to get insurance. So there's captive agents and independent agents. There's also what's called a direct writer, like a Geico is a direct writer. You go directly to them to get a policy. Captive agents like State Farm, Farmers, if you call them, they will give you a State Farm policy, a Farmers policy. That's all they have to offer. If you don't fit into their underwriting guidelines for a various number of reasons, they're not able to offer you a policy. So the difference with that and an independent agent like myself, we work for you as the customer. We represent companies, but we work for you. So we will take some information from you and check in with all of our carrier partners. There's really very little that we're not able to insure. We'll get to some, sort of liability pitfalls later in the presentation, but we have so many options that it's very rare that we're not able to do something.
Actually, this is kind of strangely similar to what else in the industry. Uh, mortgage bankers and
Yeah.
bank employees,
Yeah,
right?
exactly.
If you go to a bank employee, you're going to get the bank employee
Right.
product. If you go to a
Correct.
mortgage broker, they're going to have
Mm.
several different products,
They have different
different
options.
prices, right? So
Correct.
very similar to what we see in the mortgage brokerage world. So
Right. Yep,
fantastic.
exactly. So when is insurance required? So insurance is going to be required if you have a mortgage on the property. There's nothing legally binding you to have homeowners insurance. It's not required by law. Car insurance is, but homeowners insurance is not required by law. So if you don't have a mortgage, you don't have to carry it. That is crazy to me for somebody to not carry it, particularly if you don't have a mortgage. You have nothing but equity in that house. But the lender is the one that's going to require you to have homeowners insurance.
Nothing sadder than watching the news with a fire
GoFundMe.
and the person says, you know, I don't have a policy. So
Yep.
I hate paying it, but I would hate
Nobody
not
likes to
having
pay
it.
it.
I would
Yeah,
hate not having it more. So
that's exactly right. Yeah, you got that right. All right. Whoops. So there's different types of policies that you can get. And again, I'm not going to go through all of these. In general, for a homeowner to get a policy for a property that they're going to be living in as their primary residence, we write what's called a comprehensive policy. So instead of the insurance company naming all of the things they will cover, they name a few things that they will not cover. And if it's not listed on those items that they're not covering, it's covered. So it's easier to talk about what's not covered than what is covered. So when I have conversations, particularly with new home buyers, first time home buyers, we talk a lot about what's not going to be covered. The biggest one in this list is flood. Pittsburgh just got absolutely annihilated at the beginning of April, and properties that have never flooded before flooded. I dealt with so many customers that had floodwaters in their basements. That's really the biggest one. So we do offer flood insurance. We talk to customers about that. If you're what's in considered a low risk flood zone, you don't, the lender won't require you to have it, but it's still a good idea. I carry it on my house because I have a creek across the street that occasionally creeps up and makes me nervous. But I'm considered low risk, but I've seen it come up pretty high. So, but I always talk about what's not covered. So wear and tear, that's another big one. You can't just neglect the property and expect the insurance company to pay for it. The biggest thing with that is old roofs. So they're not going to replace the roof because it's old. Something would actually have to happen to it, wind damage, tree falls on it, something like that. Okay.
and Ashley, the flood insurance that comes through the national.
Yeah, there's a couple different ways you can get flood insurance. The biggest one is through the National Flood Insurance Program. That's the federal program. They have to accept absolutely everybody that applies. So the rates are the rates. If I go and get a quote for my house and you come and get a quote for my house, the rate is going to be exactly the same. It's not customer dependent. You can also get flood insurance now through private flood companies that are just like any other normal insurance company, but they have the option to decline risks. If it's too high of a risk, they have the option to say, no, we're just not comfortable with this. But you can shop it around now. You weren't able to do that in the past.
One of the things that I'm taking you off your track, but
Yeah.
uh, backflow from sewer pipes, is that
Yeah.
considered to be flood or is that something different?
No, that's something different. I actually have a slide towards the end of this, I
Okay.
believe, with some additional coverages, but I will touch on that just quickly. Water in general is a very tricky subject when it comes to insurance. It all depends on where it came from and how it got there. So flooding is defined if the water actually hits the ground outside and comes into the home through windows, doorways, through the foundation. That's considered flooding. If water comes through the drains, if the drain is clogged and it backs up into the home, that's a different type of coverage that is covered if you add the endorsement, which we always do. Okay.
Yep.
Lisa, through the agency owner, threw this in. We hear a lot about acts of God. I know growing up in the 80s, that was a big thing, that acts of God with insurance. Nobody really uses that term currently. You're still going to hear it. Acts of God are what we call weather. So
Mhm.
weather is covered, but again, it's earthquakes are not covered. That's a special kind of insurance. But if wind blows a tree over on top of your house, that sort of thing is covered. So what is included on a homeowner's policy? So you get coverage for the house itself. That's your dwelling coverage. So that's the house and anything that's permanently attached to it. So garages that are permanently attached, decks, porches, anything like that. Detached structures would be anything that's on the property but not actually attached to the house. So fences, sheds, detached garages, those sorts of things. Personal property, the easiest way to put that is if you could pick the house up, turn it upside down, and shake it, anything that fell out would be considered personal property. Loss of use, if you say have a fire in the kitchen and you can't live there for a period of time, the insurance company will actually pay for you to live somewhere else for that period of time while your home is being rebuilt. Liability and medical payments, that's if somebody is injured and you are either found to be liable for their injuries, like your dog bites somebody, that falls under liability. And medical payments is, we call it the please don't sue me coverage. So if a kid's running around in your backyard and trips and falls and needs a cast on his foot, you didn't do anything wrong, he just fell and it happened at your house, the medical payments will cover his immediate medical expenses. The hope is that that makes everything go away and that he doesn't turn around, his parents try to sue you and use the liability coverage.
So let me ask you this, Ashley,
Yeah.
and something that shocks, I think, a lot of home buyers is that they're buying a home for 100,000
Hmm.
and their homeowner's insurance policy is for like three or $400,000.
Yeah, there's
Help
a
me to
slide coming up that talks about
Okay,
reconstruction. So
sorry.
yeah, you're you know
It's
exactly
hard,
what's
sorry.
coming. Yeah, we will definitely get there. There you go. What is replacement cost? So the insurance company, the contracts are written so that if something happens and your home is deemed a total loss, so there's a very severe fire and the home is not repairable, it has to be rebuilt. The insurance company is on the hook to fully rebuild your house. So especially with older homes that may not, be in the best of areas, you'll see this a lot where these older homes go for $100,000 or $200,000. But to rebuild them, they're large, they're old. It can be triple, quadruple. I mean, the sky is the limit, really, depending on what you're buying and where it is. So if you buy a home for $100,000, do not be surprised if you see an insurance policy for $350,000. That doesn't mean that they're going to pay off your mortgage and then you get to walk away with $250,000. They're on the hook to rebuild your house the way that it stands today, and that's what they're going to do. So very different from the market value. Some high value carriers, if you're buying a $2 million home, some of them do offer the option for a cash out, where you can just take the money, pay off your mortgage, and go buy whatever you want. If you don't want to rebuild, but most carriers for standard homes will require that you rebuild.
And you're not able to negotiate that, right? I mean,
Negative. There is no negotiating that number. If it's wrong, if they have that you have 6 bathrooms and you only have 3, then yes, that gets updated. But every carrier uses an online calculator tool where you put in the basics of the home, how big it is, what it's made out of, how many bathrooms, and it comes up with a number for you. And that's what you have to use in that carrier. And you'll see differences. If you get a quote from State Farm and a quote from Erie, those numbers may look different. They shouldn't be wildly different, though. I mean, if there's more than like $100,000 swing, you should probably ask some questions.
I just think this comes as a shock to first-time home buyers.
Yeah,
It's a little bit hard to wrap your head around, but
it
but
is.
you
Yeah.
can't build it for what you bought it for. So
Absolutely correct. And sometimes it's the opposite. I mean, if you're buying a home that is in a beautiful location, it's waterfront, but it's a tiny little cottage, but you paid $1 million for it, it may only cost 200,000 to rebuild the house. That's what they're going to insure it for because the land still has value no matter what happens to the house. And sometimes lenders want to push back on that. They're not comfortable with that, but we just have to send them the calculation showing what it would actually cost to rebuild the house, and they're usually good with it at that point. Okay. I'm going to skip over that because we just talked about it. That's what a replacement cost estimate looks like. Why do you care about the replacement costs? Well, in general, when nobody thinks about these things, of course, until they actually have a loss, and then that's when it really matters. So, particularly on older homes, there are a couple different ways you can insure them. For like old Victorian homes that still have all of their original features, we can insure it with an eye towards replacing everything exactly the way that it is. It's going to cost a bundle to do that, but it's the right thing to do in that case because a person that owns that type of house is not going to be happy if you come in and put drywall up and, just slap things together and make it look like a modern home. They're not going to be happy. But there are also a lot of older homes that have been updated, and they look like brand new homes inside. So you really have to pay attention to what kind of house they're buying, and that's how you insure it. So they get back what they bought. Okay. There's also something called actual cash value. Those are more for like investment properties. Those are a little bit different types of policies where they will pay out basically what the property is worth. There is no premium benefit to that, though. Those policies are actually usually more expensive because you have renters living in them. So we don't ever do that on primary homes that the owner is living in. That always kicks to replacement costs. The lender, or excuse me, well, the lenders require it too, but the insurance companies do as well. Other structures, we already talked a little bit about that, not attached to the house. Um, Personal property coverage. You typically get anywhere between 50 to 70% of what it would cost to rebuild the house for all of your stuff inside. That's what insurance companies have found over the years that they wind up paying out on total losses. But there are limitations to that. So if you have a $10,000 engagement ring, that's something that we would want to insure separately to make sure you get that back, because the insurance companies usually only pay out about $1,000 for jewelry, furs, arts, collectibles, things like that. So we always ask customers, do you have things like that? Because we want to make sure we properly insure it. Nobody wants to lose their engagement ring, excuse me, on their honeymoon and find out they don't have coverage for it. I'm not going to go over depreciation because it's not going to apply to you purchasing a home that you're going to live in. Again, the additional living expenses, if you can't live there for a period of time, they'll pay to put you up in a hotel. If it's going to be more long-term, you may want to rent a home or an apartment. They'll pay for that. You still have to make your mortgage payment during this time. I think that's important to note. You would have had to do that anyway. So you still have to make your mortgage payment while your house is being rebuilt. A lot of times, the mortgage will get paid off when the home gets rebuilt and you get a new mortgage on that. They pay off the old one. So it's a whole process with total losses. It takes a really long time, usually on average about 2 years for you to get back in your house. So it's a big process, but they do pay for those additional expenses. Liability is a big one. I see all the time other agencies doing an amount of like $100,000 in liability on homeowners policies. And to me, it's criminal to do that to somebody because the cost to bump it to 500,000 for the year is usually like less than $20 for the whole year to bump it up. We never write $100,000. I will write 300,000 if somebody is adamant that they don't want 5 for some reason. But this really protects you and your assets. So the easiest way to explain it, the mailman comes up, he's delivering your mail. You didn't shovel your sidewalk that day. He slips and falls. He's very injured. He can't work, and he sues you. So your homeowner's insurance covers you in this. And typically what happens if somebody is very injured, the insurance company just cuts a large check and makes them go away. Dog bites are a big one for that, especially if they bite a child. The insurance company just wants that to go away. So they will typically write a check for it. Now, if you only carry $100,000 and you have a dog that unfortunately injures a small child, the parents of that child can sue you personally. And if they win, you either have to come up with the money, sell your house. They can put a lien on your house. They can come after any liquid assets that you have. So savings, things like that. Just don't do it. Don't let an agent talk you into going with a low liability limit. I don't know why they do it. We don't do it in our agency. If you looked at our policies, 99.9% have 500,000 or more. We could, if some carriers allow $1 million, and we'll do $1 million if they allow it. We talked a little bit about medical payments, deductibles. This is a big one. Just like with car insurance. So you're driving along, you accidentally hit a deer. The insurance company says, okay, it's going to cost 5,000 to fix your car, but we're only going to give you a check for 4,500. That 500 was your deductible. It's the exact same thing with homeowners insurance. So if you have a fire in the kitchen and the total damages were like 20,000, you're probably going to end up getting a check for 19,000 because 1,000 is generally the deductible right now. We can go higher, of course. I try to Assess somebody's situation. First-time home buyers don't typically have a lot of liquid cash laying around to pay if they have a loss. So we try to keep the deductible as low as possible. But in some instances, it does make sense to go higher than that. If you carry a higher deductible, your premium will be lower. Okay, true or false? Cheapest policy is the best policy. This cannot be more false. A lot of times I will have customers say, oh no, I found a better policy somewhere else. Thank you for all that you did, but I'm going to go with this other policy. I will always, always, always ask, can we please go over that quote together? I just want you to understand what you're getting. If it's better than mine, then cool. It's better than mine. I feel good about that. But there's so many different things that customers don't understand, particularly with deductibles. You may wind up with what's called a percentage deductible, which can be thousands and thousands and thousands of dollars if you have a loss. So we don't ever want to just, somebody look at the bottom line and say, huh, this policy is $1,000. Your policy was 1,300. I'm going to go with theirs. Now, sometimes customers don't want to do that. They don't want to send it to me, and that's cool. But I always do offer to go over it and make sure they're getting what's best with them. Some additional coverages. We talked a little bit about water backup. So I live in a really old house, and I still have the original cast iron pipes in the basement that link into terracotta pipes in the yard. So my house is what I like to call a ticking time bomb. Um, I've had to have the main lines snaked 3 times in the last 5 years because we keep getting water backing up into the basement. Now, luckily, I don't have a finished basement, and it never really, like these pictures over here, it never looks like that. It'll just be puddling. But eventually, I'm going to have to bite the bullet and replace these lines. So if water does back up into the basement, we always include this coverage. This is the #1 cause of loss in the Pittsburgh area because most people are sitting on really old lines. And the drainage systems in Pittsburgh are not great. So we always include this coverage. Again, unless somebody is adamant they don't want it. To me, saving $50 a year when something like this could happen is not worth it. So
And a lot of it, people should look at the house when they're going to buy it. I mean, if you're at the bottom of a hill versus the top of the hill, you're looking for signs of previous
yeah,
water.
yeah,
We've had a really heavy spring, so
been rough. Yeah,
it's been. And you bring up a great point. If you finish your basement, that's great, but if we get water sometimes like
yeah.
we do, that can be a detriment to you.
You
So
are at risk if you have
so
I mean, even if you don't have a finished basement, there's a lot of mechanics down there too. You've got your furnace, your hot water tank. If you get water rising down there, those items are going to be impacted. So you definitely want to make sure you have that coverage. On the flip side of that, and this is something that realtors are so, so, so good at telling buyers, when you talk to your insurance agent, make sure you have sewer line coverage. This became extremely popular about 5 or 6 years ago. Prior to that, most carriers weren't offering it. But now most carriers will offer usually up to 20,000 is about where it maxes out. But this coverage will pay if you have a broken sewer line. Now, I want to clarify, if the broken line is under your foundation, there is no coverage for that. And it doesn't matter who you go to, what company, there is no coverage for that. The line has to have an issue from the exterior wall of your foundation to the main hookup at the street. So basically under your yard, under your driveway, that sort of thing. We see this a lot with collapsed pipes because they're just old. Again, my ticking time bomb house with the terracotta pipes. This could happen any day to me. If you have a lot of trees in the yard, you may get some tree roots into those lines. And it's not just the sewer line, it's gas, water, sewage, electric, whatever lines are buried. If something happens to them, the insurance pays to dig it up, fix it, and put it all back together for you. Huge, huge, huge. We always include this coverage. Oh, I should probably point out with that though, sometimes I'll get buyers calling me and saying, hey, I had a sewer inspection today. The line is jacked. So make sure you put sewer coverage on there. That's a very sticky situation. You can't go into a policy knowing that there's an issue and try to file a claim on it. That's like buying a car that's wrecked and trying to turn it into your insurance company. You just can't do that. If I hear that, I can't add the coverage. Ethically, I could lose my license. So If you know there's an issue, work it out with the seller to get it fixed before you purchase the house, or understand that you're probably not going to be able to get this coverage. Now, if you don't know about it, different story. But if there's a paper trail, they'll find it. Flooding, again, there's no such thing as not in a flood zone. Everybody in the country is in a flood zone. It's either high risk or low risk. Most of the country is in a low risk flood zone. There's a lot of pockets in Western PA. Bridgeville is a huge hot pocket for flood zones. So if you buy a property that's in a high risk flood zone, your lender is going to require that you get flood insurance. Again, we have the ability to shop you around. I think we have 5 or 6 carriers now that do flood. So it's not the disaster that it used to be. It used to be wildly expensive. It's still expensive, I'm not going to lie to you. But at least you do have some options to shop it around now. If you're in a low risk zone, it's available to you, but it's not required.
And so that's a good point. As you're looking at different homes, as you're visiting open houses, and maybe one appeals to you, anyone can access those FEMA maps. You just put in the address of the
Yeah.
property, and they'll show you whether you're in a high or low risk area.
Yep.
And that, it's okay, of course, to buy a home in a high risk area, but
Yep.
you're going to be required to have the coverage, and that coverage is going to add an additional cost to your monthly payment or annual payment. So
Yep. That's exactly right. And again, it's all a matter of, do you love the house? Because we'll work around it. We'll make it work for you. If this is your dream house and it just happens to be in a high risk flood zone,
yep.
but a lot of times customers will back out because of that, because it just makes the house cost prohibitive, and it's like, we'll just keep looking. But yeah, you can pull up the maps at any time. I run flood zones for people all the time as well, because sometimes it's like right on the line and they're not quite sure. But yeah, definitely check into that. So some big things that are happening right now when it comes to insurance. Insurance carriers are being very, very picky on the age of the house, the condition of the roof, and updates. So heating, electric, plumbing, things like that. They want to know all of those things, when these things were updated. Now, nobody expects you to know exactly when the electric was updated, but they are going to be asking, does the home have knob and tube wiring, the push fuse boxes? And your home inspector will tell you these things. Knob and tube wiring, remember how earlier in the presentation I said, there's really not that much that we can't insure. Knob and tube wiring is one of those things that we cannot insure right now. And it's very difficult because it's a very expensive thing to replace. So there are a lot of houses that still have active knob and tube wiring in them. And the reality is people just don't know. So many people are declining inspections now, so they don't even know that it's in there. And I mean, a lot of policies do get written with knob and tube wiring, but if we know it's there, we cannot write it. The age of the roof is a big one. Most carriers want roofs to be less than 15 years old right now, which is bonkers because roofs will last 30 years. But that's a big one. So if the roof is old and deteriorating, there's going to be some problems there.
So Ashley, if you do have knob and tube wiring and you get
Mm.
coverage and there's a fire that can be traced to that knob and tube wiring, does that affect anything?
It can.
Okay.
Yeah, it absolutely can. Now, the question becomes, did you know it was there? That's really going to be the question. If you have a home inspection done and you knew it was there and you declined to disclose that at the time that you got the policy, that could be an issue. Have I seen carriers deny coverage for that? I've not seen it in 15 years, but it could happen if you knowingly say nothing. So,
Falsified.
yeah. Past claims, if you've had past claims, that's definitely going to impact future rates. If there were large claims on the house you're buying, maybe there was a really large fire, that's not going to impact the amount that you pay for a new policy, but the insurance company just may not want it. They may want to make sure that the property was correctly fixed after the loss. So they may want documentation from the seller. We would discuss all that with you.
So past claims, there's like a credit report for claims,
Mhm.
isn't there?
Yep. It's called a clue report.
Would that include automobile claims as well?
That's a separate, we do run a clue report when we're doing auto insurance, but it's a separate report. If you have accidents and things like that, that's not going to impact your homeowner's insurance. It's only if you're filing even renter's claims. If you have a renter's policy and you file a claim on that, that can impact your homeowner's insurance.
Good. Okay.
going forward. Dog breeds, this is always a touchy one. I'm a dog person. I absolutely love dogs, but there are still some carriers who will decline coverage if you have dogs that have previously bitten, of course. If you have a dog that previously bit somebody, you're going to have a really tough time finding insurance. But if you have dogs that are certain breeds, Pit Bull, Rottweiler, Doberman, there are still carriers that will not accept the policy. So we have a lot that will, so don't sweat. Don't, whatever you do, don't lie. I tell this to new first-time home buyers all the time. Sometimes people will tell them, well, just don't say it's a lab mix. I'm going to ask you, what's it mixed with? And if you don't know, that's cool because most people don't know. But then my next question is, does it look like a pit bull? So I just don't want anything to happen where the insurance company goes out and does an inspection, sees the dog, and now they're canceling because they didn't know there was a pit bull there. So just don't lie. We'll have a home for it. Just make sure you're upfront and honest.
If you are dropped by an insurance agency for something like that, is it more difficult to get the
Mhm.
next policy?
Yep, because there's a question when you get insurance, have you ever been declined or canceled on a prior policy for any reason other than non-payment? And we have
Gotcha.
to answer yes. And if we answer yes, then we have to talk to an underwriter and ask for an exception. So swimming pools and trampolines, those things are cool. We just need to know about them. If you've got a swimming pool, the yard's got to be fenced. Trampolines, they're going to want it tied down and the safety netting around it. But no issues there. We have homes for all those things. We just need to know they're there. And the overall condition of the home. So if you've got a bunch of peeling paint, broken windows, there's a bunch of debris in the yard, you've got a collection of old cars in the backyard that are rotting away, those are going to be issues for the insurance company. So the home just has to be in overall good condition.
So Ashley, let's say you find a little diamond in the rough,
Yeah.
and after a year or two, you get a chance to put your touches to it. Is there a chance to upgrade that based on overall condition?
Yeah, absolutely. I mean, there are some carriers that we know are less picky about certain things. So if we know that there's, maybe it's not in tip-top shape, we may look at carriers who specialize in rental properties, but will insure owner-occupied properties. They're typically more lenient with things.
Mhm.
And if same thing if your roof is old and we have to put you with a carrier that maybe the rate isn't great. Once you repair those items, absolutely, we would definitely want to reshop you and find you something better. Renter's insurance, it works very similarly to homeowners insurance, but you're covering all of your personal property inside an apartment or a house that you do not own. You still get coverage for loss of use. If you can't live there, they'll pay for you to live somewhere else. You still have liability coverage, medical payments. You still get all of that stuff. Um, if you cause damage to the home, I've seen the liability be used on this. I had a renter once who left candles burning and caused a fire, and her renter's insurance paid liability to the owner of the home. If it's something that's totally not your fault, like there's an electrical fire, then the owner of the home, their insurance would cover it, but you would obviously have to find somewhere else to live while it was being fixed, and your renter's insurance would cover that. Super cheap. I mean, renter's insurance is typically like less than $300 a year. This is the big one that you see on Facebook all the time. GoFundMe because they didn't have renter's insurance because it's not required. For the amount that it costs monthly, it's crazy not to have it.
Yeah, I think anyone out there that's thinking about home ownership, this is a perfect segue to get someone on your team for the future, to
Yeah.
make sure you have renter's insurance, and then
Yep.
that agent becomes a natural transition to your homeowner's
Yeah,
insurance. So,
absolutely. And you get a discount on your car insurance if you bundle everything together. So sometimes the discount winds up paying for most of what the renter's insurance costs anyway. So it's definitely a good idea to do it.
yep.
Some other types of policies, condos, obviously, you're insuring the inside of the unit and your personal property. You don't own the outside, so you're not insuring that. Vacant homes, if you're not going to be living there for a while, we would need to call it vacant. And it's a different type of policy. Those are more expensive, of course, because the risk goes up. You're not there to mitigate if something happens. And renovations. A lot of times people buy things to flip them. We have policies for that. We just need to know what's going on. Sometimes people just don't want to tell insurance agents what's happening, but they don't realize that the market is totally different than it was 10 years ago. And all of these products exist. We just need to know what you're doing to make sure you're properly covered. Auto insurance, everybody knows, mandatory in PA. Please don't ever carry state minimum coverage for a million different reasons. The average new car in the United States right now is about $50,000. So if you are in an accident, it's your fault, and you total somebody else's new car, state minimum limits in Pennsylvania will only pay out $5,000 to that person for their car. That's the state minimum. That's all you're required to carry. But the problem with that is if that car costs $50,000 and the insurance company is only paying five, you are now on the hook for the other $45,000 personally, and that person can sue you. Don't ever, ever, ever. If you're buying your own policy online, cool, bump those rates up or bump those coverages up. And not only that, but going to get insurance, like once you're shopping around, a lot of carriers won't even take a new policy if that person currently has state minimum coverage. Travelers will not write you if you have state minimum coverage right now. They really want customers who are willing to carry higher limits and come into it with a higher level of responsibility. So if anybody wants to talk about that after the presentation, feel free to call me. It may be a good time to get your, and you may say, I don't own anything. What are they going to get from me? They can attach future wages. There's a lot that can be done if you get a good attorney. So you really want to protect yourself. I'm not going to go through all of these. This is basically the coverages that you'll have on your auto policy. The two main portions are liability and then physical damage. So liability pays to somebody else that you injure or cause damage to. Your physical damage will cover your car, so your comprehensive and collision coverage. And you don't have to carry comprehensive and collision if you don't have a loan on your car, but we always recommend that you do if it's your only vehicle or it's less than 10 years old. There's additional coverages that you can elect: rental reimbursement, towing coverage, all of those things. We talk to customers to see what's the best fit for them. We don't do one size fits all policies. The tort option, this is a big one. Nobody knows what they have. I ask customers all the time, do you have limited tort or full tort? Oh, I have a loan, I have full tort. That's full coverage, full coverage. The tort option deals with your right to sue. I'm just going to touch on it quickly. With limited tort, you save on the insurance premium. You don't pay as much, typically about 15% less. But if you are hit by somebody and you want to sue for pain and suffering, say you're now scared to drive, that's an intangible type of thing that you're trying to recover damages for. You cannot do that with limited tort. You can still sue for your medical bills, your lost wages, your property damage, but you cannot sue for pain and suffering. No whiplash, none of that stuff. The caveat is if you're hit by a drunk driver, commercial driver, out of state, you can still sue for it. But just your regular run-of-the-mill accident, you can't. With full tort, you pay more for the insurance. You pay for the privilege of being able to sue somebody is basically what it is. You have unrestricted rights to sue for whatever you want. Now, have I seen people sue for a lot more with limited tort with a really good attorney? Yes, I have. So again, attorneys can do wonders for things, and that's a complete, I don't make recommendations on that. I let people decide what they want to do. I personally carry limited tort, so that's up to the person. Discounts, security systems definitely help. The multi-policy discount is the biggest. So if we can bundle your home and auto, you're going to get a huge discount on both. Insurance score plays a huge factor. This is very different from a credit score. We're not running your credit. We're not looking at your credit history. We're not looking at your credit report. Insurance history, the insurance score is based on, it's kind of like when you get the pre-approved offer for a credit card in the mail. They haven't looked at any of your stuff, but they can see if you consistently open things and close them. The insurance score is looking at how long have you been with your prior carrier. Are you somebody who shops around every 6 months and bounces from here to there? They also will take into your claim, they'll take into consideration claims history, accident history, all of those sorts of things. So that's a big one. The insurance score is definitely a huge factor for insurance scoring. If you're a first-time home buyer and you don't have really a lot of history, you may see yourself with a higher rate than, say, if your parents went out and bought the exact same house because their insurance score may be better. But over time, that improves. Just touching real quickly on the current state of the insurance industry, and then that's where this wraps up. Right now, as of May of 2024, the average homeowners premium in Pennsylvania is about $1,400. That's huge compared to where we were 4 years ago. My entire career, it was anywhere between $600 and $900 until 3 or 4 years ago. We're hoping that this settles down, but just like everything else, who really knows? So this is why it's so important to shop around, get with an independent agent, have them shop it for you. it's more important than ever to work with an agent that knows what they're doing. The last thing you want is for somebody to get you a policy and then realize that, oh, it didn't fall into the carrier's underwriting guidelines and now they're canceling and you have to find new coverage. It does happen from time to time with inspections. Carriers do go out and do random inspections. We can't stop that. So if they go out and they don't like the condition of the roof, they may ask you to get a brand new roof. And that's a tough pill to swallow. So, we'll do our best to find you additional coverage, but if the roof really is that bad, you're going to have to replace it. And we hear all the time, well, the home inspector said the roof was fine. I got another 3 years left on it. Well, the home inspector is not the one paying the claim if something happens to it. So the insurance companies do not care what the home inspectors say, I promise you. It's just a really, really tough market. We're all very frustrated with it as well, but we do our best to help people work through it. But again, have a really good conversation with your insurance agent. Don't just assume that, you're getting the best coverage because you called one place. You may not be.
Ashley, go back. Are you able to go
Yeah.
back real quick? So, I just want to point out to everyone, that last statement, that's almost 100% increase
Yep.
in the last 4 years. So
Yep.
one of the things that part of the education, we're trying to bring to people is as you are shopping for your home loan, it is not uncommon for the banker, mortgage company, mortgage broker to show you a $60 a month insurance payment.
Right.
And they're doing that to try to win your business because
Right.
now
Because your payment looks low.
your payment looks lower, but it
Right.
is fantasy and not based in fact.
Correct.
So if
Correct.
you are shopping two different mortgage companies, two different lenders, and one
Mhm.
person showing you $60 a month and another person showing you 110, 120
Right.
a month, I think you should lean to the guy that's doing the 110, 120 because they are
Not
actually
agree more.
they are being
Well,
honest.
I mean, most of the referral partners that I work with, the lenders that send me their new home buyers, they're using this figure. They're using anywhere between 12 and 1400.
Right,
And it may be a sticker shock when, you're first getting approved,
right.
but you're going to be so happy that they don't come to you a week before closing. And now all of a sudden your cash to close is an extra $1,000 because the insurance was a lot higher than they thought it would be. Oh, and your monthly payment is also $60 higher than they thought it would be. So yeah, that's a great point. There are a lot of lenders that are just holding on to that $60, $50 a month figure, and it is absolute fantasy right now. Can you find a policy for that? So there are some. I mean, I think the lowest one I've written in the last 3 months was probably about $700.
Right.
And again, that's so few and far between. It's a super small house. It's just not reality.
But to the people out there shopping for a home loan, as I said, I would suggest you lean to the person giving you the higher bid.
Agreed.
Just to Ashley's point, they're being honest with you as opposed to trying to feed you something that's not honest.
Right.
And there'll be no surprise at the closing, as
Yeah.
Ashley mentions.
Yeah,
Ashley,
they're not trying to bait and switch you. I
right.
mean, the people that are giving you, if anything, it might come down some, and everybody loves that. So
Yep, we got a few more minutes. I wanted to see if you could address a little bit about, one of my favorite things working with people is to remind them about car insurance, the type of savings you can get if you make a 6-month payment rather than a monthly payment. What's your experience when you see something like that? Is that based in
yeah,
fact, or is that
there's full discount, and every carrier is different, whether they do a 6-month policy or a 12-month policy for
Ashley,
car insurance. All homeowners insurance is 12 month.
you
Oh, am
you
I losing
paused?
you?
Yeah, you paused for a minute, dude, right as you were
Sorry,
getting.
am I?
That's okay.
Okay. Yeah, the carriers will almost always give you a discount for paying in full, either for 6 months or for 12 months. Those savings, depending on what your premium is, can be substantial. It can be 10 or 15% for paying in full. If you're able to do it, I definitely recommend it. It takes a monthly, thing off of your plate, but just make sure you're planning for it when it comes up for renewal so you don't get surprised of, oh God, now I have this, $1,200 payment that I have to make. But you can absolutely save a lot of money if you're able to pay in full. So it's a great way to save money for yourself.
A
Plus, you don't get
perfect
the installment fees. They all charge installment fees too.
Yep, a perfect thing to put in place when you get a tax refund.
Yeah,
And
exactly.
the reason is
Exactly.
someone doesn't have to touch it 6 months every
Yep.
year. It's just twice
Right.
a year they've got to touch your payment. And
Yep.
as you throw in there, sometimes they charge you to pay by credit card, or sometimes they charge you to pay by
Right.
telephone. So
The monthly debit.
all those things adding up. So
Yep.
fantastic. Actually,
Yeah.
we had a couple questions in here. Let me see, Grant, if we got. Uh,
Yeah, there was, I think you've kind of answered them all, but
okay.
one person asked if you could highlight the differences between renters and homeowners insurance, which I think you did highlight, but um, is there anything more kind of specific or anything you want to highlight on that?
I mean, really, we do sometimes get questions of, somebody's purchasing a home and the seller is going to hang out for a while. Maybe their new home isn't quite ready, so they're going to rent back for a period of 30 or 60 days. That's something that you absolutely need to let your insurance company know. There are some carriers that are okay with that. They'll allow a short-term rental. But in that instance, once you become the actual owner of the home, your homeowner's insurance goes into place. And you would absolutely want the person who's now renting back from you, the seller, to get renter's insurance to make sure that, your investment is protected if they do something. But really, the biggest difference between renter's insurance and homeowner's insurance is just that renter's insurance doesn't cover the structure. It's all of your stuff inside, but not the structure.
And which is similar to condo insurance, because a condominium, you
Correct.
don't own the building, you own the airspace inside of the building. So a
Mhm.
condo insurance is very similar to a renter's insurance policy.
It's
They
very similar, but you do, and again, condos are very complex. We always
interior
ask a lot of
walls,
questions,
floors,
but
yeah. So
walls in, you
yeah,
own the cabinets, the walls, things
yeah,
like that. So yeah,
more similar to renter's insurance.
correct. Yeah.
Fantastic. So so good. Was that all of them, Grant? We're good there on the questions?
There's one more, but that you did also touch on, but if you want to reiterate,
Yep.
they asked if you have to rebuild, does insurance still pay for your living while you can't be at home?
Yeah, if they're rebuilding your property, and again, I mean, sometimes that can take up to 2 years. So you've got to live somewhere. So if it's going to be a long-term sort of thing, they'll typically suggest that you rent an apartment or a house. They will pay for that rent. There's always a limit on those policies of how much they'll pay. Typically, it's a percentage of the cost to rebuild your house. So I've never seen anybody run out of that coverage. You always have more than enough for something like that. If it's going to be short term, a couple weeks, they may just put you up in a hotel and pay for that. But otherwise, yeah, they'll pay for you to live somewhere else. Again, you still have to pay your mortgage though, so don't forget that.
Actually, bring up that screen again that has your contact number in there, because this has
Yeah.
been super helpful. And I want to make sure, as people are out there trying to find team members to help them with their home purchase, if they want to connect with you, that we have that up there. So this will be on our Instagram, Facebook page as searchable in the future. If there's something you wanted to double back and re-listen to. Um, but Ashley,
Anyone who's
I
thinking,
I can't thank you enough for giving us your time and your
I don't
knowledge.
know what's happening here. It's not, it doesn't like me.
Well,
Hang
then
on.
just give me how about the phone number then? It's
Yeah.
724. Yeah.
Yeah. It's 724-825-1013.
And that's with Goosehead Insurance,
You
correct?
said insurance. Yep. You got it.
Good. Ashley, thanks again so much.
Yeah, absolutely. If you guys need anything else, I'm always here to help. Feel free to reach out. If you're in the early process of home buying and you just kind of want to talk about what that looks like from the insurance perspective, reach out. You don't need to be focusing on any particular house to do that.
Good. Fantastic. Thank
Okay.
thank you, everyone. We'll get our last Homebuyer Club of the year scheduled here shortly, and be looking forward to texts and emails about that. And if you want to connect directly with me, give me a call, and we can update some of your progress as you're working towards your goal. Thank you.
All
Thank
right,
you,
guys. Have a
Ashley.
good one.
I appreciate you.
Take
Thank
care.
you.
You bet.